The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 24th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that is something you and I, we must master each and every day. So let's begin with an empowering belief. And this one is an empowering belief, folks. And it goes like this. We must know that in any moment, a decision that we can make can change the course of our life forever. The very next person you stand behind in line or sit next to on an airplane, the very next phone call you could make or receive, the very next movie you see, or how about a book you read, a page you turn, or maybe even a master trader workshop that you take. Any of those things could be the one single thing that causes the floodgates to open. And all the things that you've been waiting for, they will fall into place. That is a beautiful thought. Let's go check out these markets here. Right now, the Dow is trading off 24 points. S&P down 4. Composite is off 6 points. Russell 2000 leading the charge on the way down. That's off 4 points, so we're certainly going to be paying attention to the Russell 2000. Leading the charge stock-wise to the upside, you've got LinkedIn up $6 and change, up 2.5%. Netflix is up about $2 and change, only about 1%, up 18% this morning. Greenway Medical, GWAY, that's up now $3.11. Amazon to the upside, up $2.32. Facebook up about $2. You've got Yelp. That's up $1.93. Zillow up $1.72. Rocket Fuel, F-U-E-L. A little bit of rocket fuel inside it, up 3% this morning, up $1.84. To the downside, we've got the Red Hat off 12%, trading down 650, out at 46.46. Athena Health, ATHN, off 5%, down $5 and change. Carnival Cruise Lines, CCL, that's off about $3, about 7.5%. We've got Carnival PLC, so we got the entire Carnival group here. That's down 7%. Kihu, QIHU, it's all I know. It's off about 3%, down 240. Our call number 877-927-6648. Give me a call. Be happy to take a look at your stock chart, answer any question that you've got. Let's start off by taking a look at let's get our parameters here set up for the day. We've got the VIX index on the screen along with the S&P 500 on the bottom portion. Yesterday, the VIX had tried to get inside the 50-day exponential moving average, was rejected. That 50-day exponential moving average, 1453, 1452. Either in one of those, and look, if it closes at 1455, that's not exactly a lot of conviction behind here, but if you do see a swift move above that 50-day exponential moving average, that spells double trouble. That would be your first sign that what we have going on in the marketplace is more than a correction out there. So that's the first indicator that you want to be paying attention to. Number two, you want to take a look at net declining issues inside the New York Stock Exchange. Net declining issues right now as we speak is minus 909. The number needed to hit today is minus 968. Look, if it's minus 968, not a lot of conviction there either. But at minus 968, the bears would actually take control of the ball today. So if you got the VIX and you've got the New York Stock Exchange in bearish territory, that would say, maybe more than something to just think about. Now, we're taking a look at the New York Stock Exchange right now. That is holding above. The retracement here has not been bad at all thus far. So other than the large downdraft that we saw on Friday out here, but even that wasn't too bad. So the dead cat bounce inside of the New York Stock Exchange, the 0.382 retracement, would take you to a level of about 98.53. Now, you've got an open gap that's really beginning. It's at the top of the trading session. We're going to call it 96.55. Did I say 98? It's 96. So the gap right there and the .382 retracement is like 96.53, 96.55 is really the number. So as long as that gap holds, that's very bullish. And at this stage here, with the pullback that we've seen in the markets, New York Stock Exchange has not been overly enthusiastic to the downside here. Just still trading inside the Uncle Ben Bernanke day from September the 19th out there. Also, the lower part of the range, that key reversal, bearish engulfing that candle from May 22nd out there, the high 96.95. If it holds that level, that is also bullish. So those are the parameters. Those are the initial parameters now that we're taking a look at. Let's go see what's going on inside the S&P, inside the indexes, just to get a better grasp on it. So we had a nice move off the bottom. That was the August 27, 28, 30th time frame inside the S&P. That's what we're taking a look at. The low is, looks like the low came in here on the trading session of August 28th at 1627.47. If you go from that low to the high that was put in on September the 19th, you'll see that price has also not backed off to the .382 retracement. So, and which is a normal move, especially a normal move, on the New York Stock Exchange. I didn't point it out, but here on the S&P 500, look, it got into what? Overbought condition. It moved up to the overbought condition. That told us that in order to work that off, we take a look at it on the intraday charts out there. Works the same on a daily, works the same on a weekly chart out here. In order to work off that condition, the market's either got to travel sideways or pull back and travel sideways. And that's really what we have going on right now inside the S&P 500, and thus far has not made the .382 retracement. Also, as we take a look at the S&P 500, you do have that rising price channel that is tacked out here. So it looks like the 1690 area, not 1590, but the 1690 area, is where the S&P may want to get to. I would like to see it get down there. I'd like to see it go test that rising price channel. I'd like to see it go make that .382 retracement and then see some kind of reversal in the marketplace. That would then set up a nice buy pattern out there. Let's go take a look at the weak hands in the marketplace. Let's go take a look at the Dow. What has the Dow done? Also, really having some nice strength off of its lows out here from August 28th. That low being 14,760 all the way up to the high that was put in on Uncle Ben Day out at 15,709. It, too, has not made the dead cat bounce. It, too, has not made the .382 retracement, which is at a figure of 15,347, which also is there was a small little gap. We pointed it out yesterday at 15,380.97. That gap was tested yesterday. In essence, the gap has been closed. It held as support. If you get 3 trading sessions today and tomorrow, because yesterday, the 15,380.97, you actually got down inside the Dow yesterday to 15,368, closed back above it. 3 tests are all you need to create a nice area of support out there. So the Dow, which has been the weak link out here, and you can see really not that weak when you take a look at retracements, just normal retracements, as it too needed to work off its overbought condition out here. So at this stage, we're not exactly seeing the market that has fallen apart out there. There are absolutely signs that make us say we have to be paying attention out here. This is not as simple as, hey, the Fed has decided to continue the printing of money and just buy out there. There are other parameters that you really want to be paying attention to. If we take a look at the Russell 2000, I mentioned the Russell 2000 leading the charge today to the downside off about 0.3%. But what does that really mean? Well, what that really means is if you come off of its low down on September the 3rd out at 1,009 all the way up to the high that was put in on September the 18th out at 1080 out there, it's far from the .382 retracement. 1053 is where it would take in order to be able to get the Russell 2000 down to its down to its .382 retracement level, and right now it is traveling out at 1067. So it's got that would be another 14 points to the downside. We would feel that punch. So the Russell 2000 not looking too shabby as we speak. We take a look at the NASDAQ Composite right now. Same thing. We're going to use those same parameters out here. This market will not go south without this guy right here, in essence, leading the charge, at least pushing downward. And we haven't seen any kind of reversal here inside the NASDAQ Composite, not as of yet. Coming off of its low from August the 27th to the high that was put in here on September the 19th, the .382 retracement down about 37.12 out there. So it's just working off an overbought condition as well. We take a look at the NDX 100 here. And just to finish this out, to round this out here, again, coming off of the swing point low, in this case, August 27th, up to the high that was put in on September the 20th out there. A lot further to go before it even works out, gets to the 0.38. And getting to the 0.382 retracement level, folks, that's just like normal. There's nothing wrong, especially when you are coming from a overbought condition, and that's the case here inside the NDX 100. So all the markets really lined up, but nonetheless, we want to be paying attention to the VIX index. We want to be paying attention to net declining issues today, because that will be a big signal. 968 is the number right now as we speak. It looks like it's about 991. But that is at the end of the trading session. That's the end of the day. That's at 4 p.m. before we actually get those numbers out there. But we have our parameters, which is really pretty cool out here. And why is it pretty cool? Because if we actually have if you're a person that actually likes to be able to sell the top, in this case here, we just took a look at all these indexes that really haven't made the dead cat bounce. So that means we're really pretty close to the top. So you can take the day today, get the VIX above the 50, get the bears to, or the bulls to actually lose control of the ball because the bears take it over, and really you're up towards the top, and all you really were doing was waiting. You were waiting for some signals out there. The other nice thing is that these markets are really coming from an overbought condition. And that says that if we are to see a deeper reversal out here, you got time. You can get on the short side of the trade. You're up near the top. You're towards selling the top. And on the daily charts here, you've got a lot of room to run before you get into that oversold condition. Before on the daily charts, you would see any kind of significant bounce out there. So that is the beauty. I mentioned in the first hour the importance of paying attention to the euro, Japanese yen. Let's go over and take a look at this as well. This is not showing any signs here of giving it up, and this has got higher price that it wants to trade to, which is the 135 area. And if it makes that move out there, we will see our markets move higher as well. So 877-927-6648. I'm going to go over and take a look at a stock. There was a request during the prior hour that I did not get to take a look at the IBB. That is the ETF for the NASDAQ biotechs out there. Right now, this is trading out at about, well, it's made a low here intraday of 206.47. Now, the area of support, because it used to be, in essence, it was really a small area of resistance. In fact, if we take a look along this leg up here, the leg up, last leg up off of August 19th, that low up to the high that was put in here on September the 19th. So really moving in conjunction with the markets out there. What we can see here is the market, the IBB, got into an overbought condition. But it, too, has made hardly any kind of retracement. So if we take a look at that, if we go from the low all the way up to the high out there, you can see the dead cat bounce. Well, that'll take us right into the 0.382 level. Happens to be the exact same level where we see old resistance. Now, it wasn't really tested because it was a little bearish engulfing candle from September the 6th. Didn't take much to really engulf the prior session, which was a little doji out there. Suggested that the market was tired, but no. That very next trading session, September 9th, it moved higher. And so the first area of support with regard to the IBB, and this is a question about going ahead and trying to take a short here, this needs to at least bust through an area of support, and that's going to be your high from September 6th, and that is at the level of 202.70. But when we come back, let's go take a look at the weekly chart of the IBB. Let's go see if we can find where its support level is as well. Right now, we've got the Dow down 59. S&P is off 7. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is off about 55 points right now. S&P down just under 6 points. And we're going back out, and we're going to take a look at the IBB. That is the ETF for the NASDAQ Biotech. And what I've got up on my screen here is the monthly. Now, remember, whatever time frame it is that you're trading on, the most important thing that you can do is not just focus in on any just one time frame. So if you're taking a look at a, say you're not a day trader, but you're making your decisions off of a daily chart, make sure that you go up at least one level, meaning to the weekly chart, as well as go down another level as well. You know, reversals, you're going to catch earlier reversals on a daily versus a weekly. But you want to understand what the trend is doing, where you're at, where the support and resistance areas are. The IBB has been, if we take a look at this equity here, this ETF, it's strong. It's not a parabolic move, but it is a heck of a move up. The question was to take a look at the A to B equals CD patterns. There are times when on charts the AB equals CD patterns just don't work, and this is really one of them. And now, most charts you'll see A to B equals CD patterns. But as I take a look at the monthly pattern out here, in my opinion, the AB equals CD pattern is irrelevant. What's most relevant on this chart here, on the monthly chart, is to understand this, that a market is never going to go down unless you get some type of reversal signal, some type of reversal candle. So if you are trying to sell a top tick, then you're gonna be trying to sell a green colored candle. At least on my stock chart, could be black, white, whatever candle colors it is that you use out there. And to me, that's a dangerous thing to do. Just because a pattern completes doesn't mean that that's where it's going to end. You've got to wait until you see some kind of reversal signal. Inside the IBB on the weekly, on the monthly chart out here, the only candle that showed up that suggests the weatherman of weather forecaster said, hey, there's clouds in the futures. They're on the horizon, was this little dark cloud cover candle here on June 30th. But on the monthly chart, that was no reason to actually get out of the trade if you were inside this ETF. So on the monthly chart, it's just not there. You could say that would be an area of support maybe at about 180. Not that you want to necessarily take that kind of heat. I don't know whether you do or you don't, but that is the area that might be some support out here. But the monthly chart looks awfully darn good out there. If we take a look at the weekly chart, right now, if we take a look, there's no reversal signal here on the weekly chart as well. So, if you're trying to sell a top tick, I would suggest doing it in something that is weaker, that's making a high, weaker, that is making a higher coming into an area where it had broken down from. This case here, basically everybody inside this ETF is big time in the money. The last time we saw any bears out here was right here on the trading session the week of August the 9th. So the high out there is 201.47. Unless this breaks through 201.47, because then what should have been resistance, it was not resistance. Now that should be the support level. That was a bearish engulfing candle. We saw some additional follow through here. You've got this right down here, this swing point. So if it can bust through that area where price would travel to inside the IBB, would be down around the 164.14 level. But as we take a look at these 2 weeks, these sessions out here, that's not bearish. That is still almost trading above the high from the week of September 13th, which is 207.78 out there. So that's the analysis of the IBB out here. And with regard to A to B equals C, AB equals CD swing point, A to B equals CD patterns, this is one that I just wouldn't, doesn't have, much meaning to me. Which A to B equals CD would you really take a look at? I suppose you could come down here to a swing point of August 12th, that low up here to October 5th, and then right down there. And the reality is, even if the question is it completed an A to B equals CD? No. Not if I was going to use that as my A to B equals CD. This tells me it wants to get to 230. That's where it would be headed. That's on the weekly chart out there. So that's the IBB. That's what you would want to do on really any stock chart. And folks, if you'd like to learn more about this, the absolute best time to do it is going to be this Friday, September 27th. In fact, you need to sign up by today. Well, you don't need to, but if you do sign up by today, you'll save $200 off of the course. Prices will go up to $795. I would rather you get in on it today if you're even the least bit thinking that now is the time for you to go ahead and consume these charts and be able to use these so that you can trade on your own. You can identify support and resistance and take a look at the different patterns out there and put it all together. Then please go sign up for the Master Trader Workshop that I'm holding this coming Friday. You'll get a value unlike anything that you've ever seen before, because to me, this is not about teaching you just about these patterns. This is about teaching you how to trade these patterns. It is the strategy behind them. It is about understanding. It's helping you overcome whatever hurdles when it comes to your own trading out there, and because we all experience them. All of us experience those hurdles. I will teach you how to get over those. I can say that with absolute conviction. 877-927-6648. That's my conviction that that's how you can reach me if you called us here at TFNN. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 39 points right now. S&P off 3.5. Composite is up 2 pennies out here. And you know, thanks for all the emails that I get from listeners out there. I truly do appreciate it. I get back to everybody within 24 hours. If I can't get back, I usually I let people know when I can, just depending on what the workload is, or maybe what it is that I'm doing out there. One of the questions that I actually got it a couple of different times, and one of the questions that came in, last week, if you were listening to the shows, every now and then I'll go ahead and I'll show some live trades out there. When I tell you I'm in a trade, folks, I'm in a trade, and so I think it was on Thursday I went ahead and showed the trade. Showed you that I was short the market. Now you know that right now my daily outlook, my short term meaning daily, my intermediate term, and my monthly, they're all bullish. So all three of those are bullish. And so I'm really looking for a place to be able to buy the market inside my newsletter and inside my retirement account. I don't trade with my retirement account. I don't trade the futures, but that's what I love to trade each and every day because the patterns that are out there. And so the question that came in was, how was it, Steve, that you could sell the market after Uncle Ben, had said that he was going to continue printing money, and they said, I watched your show and showed that you were short. There was a newsletter update there was an email update that I had sent out, and should show people part of the trading strategies, some of the stuff that I'm going to be teaching on Friday. And so the question is, how could I? Remember, when I use a daily chart, that's what I've got up right now on my screen is the daily chart for the ES. What I've got is I go down to the intraday because you're going to see reversals there. Now I'm going to put it's a different charting package because what the key to being able to overcome fear is truly understanding what your trading expectancy is, and that means you have to have a very defined trading plan. And that's what it's really all about, because when you do that, then you can have some expectations. Well, this is one of the tools that I'm going to be sharing with folks that are attending the workshop, giving them all the parameters to look for. This is the top right here. This is the time period. The actual confirmation that came in, if you were listening to that Thursday show, was at 7 a.m. in the morning. Now, I get a signal sent to my cell phone. This is a program that I developed out here that tells me when certain divergence is in place. I got one of those signals at 10:30, right at 10:30 as we were coming into the break. That said, okay, go over and take a look at that chart because it's one of my favorite. Now, this actually caught the top out here. Now, the nice thing is the reward to risk. I didn't know that the trade was going to work out. I don't have any clue when I enter a trade whether the trade is going to work out. In fact, there should be caution here because of these nice wide-ranging bars that were out here. Nonetheless, it's a pattern that I look for. I know that it has a positive expectancy. I know to go ahead and take all those trades. The reward to risk on this thing was as good as you could get because the risk was like about 3.5 points, 3.25 points, something like that. The reward here that you're really taking a look at is retracement levels. In fact, what I said on the air was my exit would be 17.14. And 17.14, so it was. Price moved down to 17.14 and then just simply continued to move sideways to work it off. That's bearish. The newsletter on Friday gave the parameters that the price ought to move up to about 17.21 before it gets down to 17.02. And price got up to 17.1950. I did miss that by a point and a half out there, and price did get down to, I said 1700 to 1706. It got down to 1702 out there. Now, this pattern here, this is at the bottom. This pattern, you got to understand. You see, here's the deal. There are patterns that each of us trade, but you need to understand when to pull the trigger. That's the cool thing about the market. It will actually tell you. Just because a pattern sets up, you don't pull the trigger. You wait for confirmation on the trade out here. So at 10:30, I got the signal sent to my phone. We're seeing confirmation here right now. We're seeing the reversal in the marketplace. But if you're ever wondering, when it is to take positions, you want to be able to have trading strategies. Now, this works on daily charts. It works on weekly charts. It works on more than just the ES Mini. But if you're intraday trading, if you're long or short some of the ETFs out there, wouldn't you like to be able to have a tool and understand how to be able to implement this as part of your arsenal for when the market could be reversing out here? And that's what I'm going to be teaching on Friday. It is absolutely one of the most fabulous. Well, it's not the most because I've got several others that I consider to be even better than this. But this one is a beauty. If you were trying to sell a high or buy a low, well, then this is a trading strategy. If that is the makeup of your personality, you want to be a, what's the word that I'm looking for? Well, you know what the word is. I just, it's at the top of my head. And on the top of my head, even though there's fewer hairs than there were 10 years ago, what is it? You want to be a contrarian. We'll call it a contrarian type trader out here. If that is your makeup in there, man, that's a beautiful, I like being a contrarian trader because what it really means, you're going to take a rubber band, you're going to let it stretch, and then that rubber band's going to snap back, and you're just looking for the place to enter. This is probably the best tool for being able to pick tops and bottoms. Now, this is short term. This is short term out there, and that's how I took the trade setup. Now what I'm looking for is the bottom. And we may have seen that signal. I'll know at 11 o'clock whether or not that signal, because I'll wait for a confirmation. I would just prefer to wait and let the market confirm for me that, in fact, we've got a reversal going on. You pay for information out there, and you want to go ahead and place a trade when the patterns are on your side. And it's just more than just understanding the pattern out there. In any event, enough belaboring on that. So we took a look at the indexes. We set up really the parameters for the day out there. Let's go take a look at some currency pairs out here. Let's go see what we've got going on inside the U.S. dollar, Japanese yen. Not really a whole lot of movement out here, so not a lot to report. Just really trading inside this wide-ranging bar out here from the trading session of September 19th. It does look like the U.S. dollar, Japanese yen actually wants higher price in the marketplace. Looks like it just really set it up in A to B equals CD up. That A to B equals CD up. Let me clean off some of the stuff that's on here. Let me get rid of that just to clean up the chart. Let's go figure out what that might look like here on a pullback. Let's go see what the pullback is. We come from the swing point low, which I'd use as September 18th, up to the high that was put in on September 20th. The dead cat bounce, it's just about, the 0.618 retracement, just about there at about 98.47. If that is the extent of the move, what the pattern is that it will set up, the A to B equals CD pattern will look like about that, get up into about the 100.38 level as its next move. Haven't seen the reversal here. We'd have to go take a look at the intraday chart. So let's go do that. Let's go take a look at a 30-minute chart for the U.S. dollar, Japanese yen. Let's go see if it's overbought, oversold, where it is at here. Looks to me like it is coming out of a oversold level, but we have not seen any kind of, let me get rid of that. We have not seen any kind of bullish reversal sign here. You know, if you're trading patterns and this was your spot to go ahead and take a trade, that could be it looks like that could possibly be a butterfly pattern. Let's just go see if it is a butterfly out here. I got butterflies in my stomach. No, I'm just kidding you. Yeah, so you got a 1.272 butterfly. Let's just say that you were a currency trader. So it looks like it's a 1.272 expansion of the set of swing points, and you were just simply going to go ahead and buy right there. I would tell you that is the wrong thing to do. Why is that a wrong thing to do? Because of this wide-ranging bar out here, and you've got no bullish candle whatsoever to go ahead and trade. So we're really still in that same pattern right now out here. We have not seen any kind of reversal signal inside the U.S. dollar, Japanese yen. Let's go look at the Queen Bee. Let's go see what the Queen, but let's go look at the daily chart of the Euro U.S. dollar. Let's go take a look at that currency pair, see what it is doing out here. We took a look at the Euro Japanese yen. We know that is suggesting that it wants higher price, which will be the energy. They'll be the fuel rod for the U.S. market making its highs, at least going back and testing those high volume highs that are out there. And I suspect actually moving higher and breaking through that area here. Inside the Euro U.S. dollar, this truly wants higher price, which is going to take us into, why I can't tell you, but into the 1.38-ish level. That's your 1-to-1 A to B equals CD, but I suspect what it really wants to do is move even high. Oh, why did that happen? I guess I hit the wrong tab. It actually wants to move to higher price out there. The Euro Japanese yen, the Euro U.S. dollar, I'll get it right. The Euro U.S. dollar really wants to make a butterfly pattern in about the 139-ish level. That butterfly would look something like this as we go ahead and place this on the screen, and that is more likely the pattern setup that the Euro U.S. dollar currency pair wants. So if you're short the euro, be careful right now, because I'm telling you, you're not seeing the signals out here. You're seeing all that it's doing. This is the dangerous sign. This is what also is another indication that it wants higher price. Look, the currency pairs, commodities, they all use that relative strength 14 period, as a guideline for understanding overbought, oversold, and why a market may start to turn in either direction here. Take a look at the Euro U.S. dollar. It gets into an overbought condition. And the most dangerous thing is when it's digesting that condition by just moving sideways. Unlike our markets here, they got into an overbought condition, but we've seen a pullback. To me, I consider that nice, because that's a nicer buying opportunity when the market actually pulls back. In the case of the Euro U.S. dollar, it's not pulling back at all. It's just moving sideways here. So you almost have to buy the breakout or find some other intraday pattern inside the currency pair. If we take a look at potential intraday patterns, that means we'd go down and take a look at a 30-minute chart for the Euro U.S. dollar. I'll be able to get that out. What would that pattern be? That would have to be one of the other patterns that I'm going to be teaching that's not on my screen here right now. It's going to be one of the patterns that I'm going to be teaching in the workshop on Friday, because trading anything else other than a momentum play out here, you got to trade this as momentum play, in my opinion. But it does look like the Euro U.S. dollar, that wants higher price. Let's go check out the market around the world. Let's go see what we've got going on out here. Let's take a look at the Shanghai. The Shanghai, I'm sure looking for this to, I would love to see the Shanghai. Let me update my screen, make sure I got all the right data in there. Looks like I do. We'd love to see the Shanghai, and thanks to Z in the Den, he did give us an ETF for the Shanghai out there. Of course, he says he got it from somebody else in the Den, so we just pass along good information. Let me pass it along to you. I think I've got it's a CAF is the ticker symbol, and you want to take a look at a long position inside the CAF when the Shanghai makes its way down to the bottom of this price channel, so long as this area holds. Where is that going to be? That's an excellent question. Price-wise, it's hard, it's also dependent on time. But if we just take a look at swing point low to swing point high, says it's probably somewhere in the 2250-ish range is going to be my guess at this stage. But you just have to watch. You can put these price channels on your charts as well. But I think this is one to watch. It is working off its extremely overbought condition, so we do want to see this pull back even further. Let's go see what's going on over in Germany. Let's go take a look at the FTSE. The FTSE here wanting to very badly break out of that little descending price channel out here. This too has really just been traveling sideways. Potential to set up its next A to B equals CD pattern. If it can do that, it'll be a doozy. And this is the 0.786 retracement. I believe it's a 0.7. Yeah, it's a 0.786 retracement. I don't mean to do that. So you've got a 0.786 Gartley sell pattern. Let's take a look at that pattern on its own here. And that completed right out here in the trading session of August the 2nd. So the high there is 66.96. You get a close above 66.96. This looks like a little bit like the NDX did months ago. Why? Well, you've got this gap up here, so that's pretty strong. That's from July the 5th. You've got that gap up. That is very strong out there. When a 0.786 Gartley sell fails, it turns into a butterfly. And what would that butterfly look like? Well, that's that ABC pattern. If you take a look at the A point coming down to June 24th, the B point being the high from August the 2nd, and your C point all the way down here on August 21st, there's your A to B equals CD that would actually set up a butterfly pattern inside the FTSE out here. Let me shrink this a little bit. I can go ahead and I can draw that pattern in. And so I'm not saying that's not what I'm saying it's going to do here just yet. That's what it will do. If, in fact, it's able to take out, I should have painted that a different color, shouldn't I? Because I got blue over blue. Light blue over light blue, that just gives you light blue. There we go. There we go. There's the two patterns in here. The reason I say that it's because it has to prove itself. And that means that it's got to break the 0.786 Gartley sell pattern, which it has not done yet. But it's just hanging up at the highs out here, and that is a potential pattern inside the FTSE. We go take a look at the DAX. Let's go take a look at the Nikkei. Looks like on the Nikkei here. Now, the Nikkei had set up, remember, with two patterns that I was paying attention to and really still am. One was the smaller Gartley buy pattern, and that's the light blue pattern. There's the larger one that looked like that might be what it wanted to set up here. But, now it's saying, hey, not so fast. Maybe it was the smaller pattern after all. So that pattern completed. On the trading session of August the 20th, we had a market that really just kind of chopped sideways all the way up until September the 3rd when it went ahead and took off. Now what we're seeing is a 100% move of a move, and this really could be setting up its A to B equals CD to the upside. That A to B equals CD would look like this. Your A point down here around June the 13th, that's the low. Your B point up here on July 19th, and your C point down here at the trading session of August 28th. That would say that the Nikkei would want to make a run for the 15,720 level. That's what it will do if it can get above that bearish engulfing candle from July 19th, and that is the price level of 14,953 out there. When we get back, we're going to go to Dave in Westminster, Colorado, and we're going to take a look at the GDX. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a 1-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 16 points right now. We've got everything is green, the green machine. Let's go out to Colorado. It's sometimes it's green out there. To where's Westminster, Colorado, Dave?
Just northwest of Denver, about 18 miles.
Okay. And did you watch the game last night, or were you at the game last night?
I did watch the game last night. It was pretty good.
Yeah, absolutely.
It was on our side.
Yes, that's right. That's right. It looked like it got a little bit cool out there. Some people in sweatshirts.
44 this morning.
Yeah. What temperature?
44.
In Denver?
Yeah, this morning.
Oh, my goodness. I was out there. It just seems like just 2 or 3 weeks ago it was like 95.
Well, it's going to get up to about 80 today, I think.
Is it? Okay. Okay, that's a swing in temperature. That is a swing in temperature. Let's talk about the swing in temperature inside the GDX. Tell me what you're doing and how I can help you.
Well, I never thought it would pull back this far from the Bernanke day. But anyway, we're trading them. My friend and I are trading the Nugget.
Okay.
And we were looking at this GDX as maybe forming a hammer candle this morning. and possibly in that bar from August 8th.
Okay.
The high volume day.
Yep. So on the GDX, no hammer candle today. Then there's not a chance that it would form a hammer candle. And with regard to the candlesticks, it's important, to let them go ahead and complete. Now, you did pick up an area on the daily chart where it could be finding support, and that is this 3-candle session right here, this Morningstar reversal candle. That was a session of August 6th, August 7th, and August the 8th out there. So I would say your next support level inside the GDX on the way down would be $23.89. Now, you've got to be careful today because it's taking on a swing point from September the 13th. That low is 25.08. So if you close below 25.08 with a volume of more than 50 million shares, and so far today, we've been trading for, what time is it? I guess about an hour and a half. And it's done 12 million shares. So just watch that level, because even though this would be some support down here, it's only 19 million shares at that swing point on August 7th, and that's kind of a dangerous thing. So this is, that's support, but if you were to close below the price level of 25.08 on more than 50 million shares, you might want to close out that trade.
Okay.
You don't need to right now, but those are the parameters that I would be looking for. Now, a hammer candle, the nice hammer candle inside the GDX, that is on the weekly chart. Let me put that up now. So this is the beauty. So if it does break that support level, what you want to do is you want to be paying attention to the hammer candle that is on the weekly chart, and that was the nice signal inside as far as reversal signals, potential reversal signals in the GDX. That's when my clients and I first went long, and that was on this hammer candle the week of June 28th out there. So the top of that hammer candle is what is being tested, 24.66, and so far this week we've gotten down to 24.57. So this will be an important week because you'd like to see it reject that hammer candle low, which had volume of about 231 million shares. So a lot of great areas of potential technical support or failures out here. If it fails and you get a close inside there this week, that opens up the door for the 22.21 area to be tested.
Okay, 22.21.
Okay, but that's a real nice hammer candle. That's the GDX. That's a great place.
28th, right?
That is on the week of June 28th, and that becomes a real nice area because if you get it closed below that and we're long, we're certainly wrong out there, and we'll have to just look for. But otherwise, it should act as a good support level.
Okay.
Hey, thanks so much for calling, Dave.
Thank you.
All righty. Folks, don't forget, today's the last day to save 25%, save $200 on my Master Trader course. All the details are on the homepage at TFNN.com. I hope to be able to see you there, because I will absolutely impact your trading forever. And that's a beautiful thing. Stay tuned. Basil Chapman is up next. And that's Tuesday. That means we got the Option Hour. Then we got Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. Have a great Tuesday, folks. Look forward to seeing you soon.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.